Hello everyone, today is Wednesday, October the 26th, and the Bank of Canada has just announced another 50 basis point increase to the overnight rate, which ultimately means another 50 basis points to the prime lending rate. What's going on, Joe?
Yeah, I think it's kind of crazy to think about this, but it's the sixth consecutive increase in 2022. The Bank of Canada is just completely trying to handle inflation, and their only lever to do that is to raise rates. So that's why we're seeing these increases. I guess one of the things to talk about is why only 50 basis points. A lot were speculating 0.75, so seeing a bit of a lesser increase, although still significant, is a bit of a good news story. Maybe you can just touch on one of the reasons why you think we're seeing a lesser amount come out from the Bank of Canada today.
Well, a lesser amount is, we would hope, a good indication that they're maybe getting things under control, one, and number two, that after 6 consecutive increases, totaling a 3.5% increase throughout 2022 alone, maybe they're going to cool off a bit now and watch to see the effects of these increases. You know, I've read articles and listened to economists speak, and some say that every quarter point, be it up or down, takes about 12 months to really take the full effect and to really feel the impact of what the increase or decrease has done. And again, alone in 2022, we've seen 3.5%. It's been pretty bullish. So hopefully these increases now have brought that inflation down. In addition to inflation, I know they're trying to get supply chain under control as well, because it's certainly an issue, and in our industry especially.
Yeah, I mean, supply chain is a huge part of the inflation concern. So kind of wondering, like, why has inflation gone so crazy? There's a couple things to take in mind. Obviously, the amount of money that was printed, the government spending that happened during the pandemic, you can't put that much money in the market and not have inflationary results. So we're just seeing what everyone kind of should have expected, just based on that. But supply chain is a huge issue. So, I mean, I think everyone can understand that things are costing more. Things cost more because they're hard to get. So, you know, there's a bid up on that. You know,
we see it in the construction starts. We talk to clients every day who are buying new homes. They're working with the builders. These builders are trying to get materials. As they wait for the material, the costs increase, which ultimately goes back to the end user, the consumer. So we're seeing house prices increase because of that supply chain delay, inflation, the cost of goods. It's a problem. So understand certainly what the government's doing, but again, hopefully we're coming through the other side of this.
Yeah, I mean, the good news is it does look like the supply chain issues are getting better. So 6 months ago, it was a very different story. You're seeing them get better. You know, recently we were at the National Broker Conference, and we actually had the opportunity to sit down with Benjamin Tall, chief economist with CIBC, and he mentioned that, you know, there's more truck drivers in the U.S. today than there was pre-pandemic. So things are moving, goods are moving. You're starting to see that get better. So that's putting some lesser pressures on inflation. And kind of what you mentioned earlier here, Josh, when we're talking about what are the impacts of all these rate increases in 2022, we don't fully know yet. So the Bank of Canada is, at least in their messaging, kind of saying we're going to not stop this. We still have a full battle on inflation in our hands, but we are going to see things come through a little bit, make decisions based on the data we're seeing, and not just say rates are going up, rates are going up, rates are going up. We don't think we're done yet, to be clear on that. There's probably some more movement to come, but it does seem like we're getting close to the point where at least they might pause a bit. And so that's good news. But we don't want to downplay the fact that there's, you know, payment increases here. If you have a mortgage that's a floating rate mortgage or a line of credit, it's going up. And it's gone up a lot in the last, 6 months.
So at a $400,000 mortgage, what's the difference in monthly payment?
You're looking at around $120. So kind of the best way to look at it, if you just want to look at the math on it, is this 0.5 increase is going to cost you about $30 a month if you have 100,000 owing. So, you know, it doesn't sound like a big number, but when we look again at all the increases that have happened this year, it's really adding up. So, you know, it's just one of those things where, does it mean you should change mortgages? Does it mean you should lock in? Maybe, but not necessarily. It's one of those things where I think you just have to really look at your situation. For every person, it's different. That's why dealing with the mortgage broker is a huge value to you, so we can kind of walk you through your situation, have an idea on where you're at, and we're just wanting you to reach out. We'll reach out to you as well, but it's time to review things if you haven't already. You might need to stay where you are, you might need to make changes. And there's options for you for sure.
Yeah, now's a great time to reach out to your mortgage broker. If you don't have a mortgage broker, we'd be more than happy to answer any questions that you have. Thank you very much for taking the time to watch this.